Hello, and welcome to the LA Venture Podcast.
This is Minnie Ingersoll, host of the podcast and partner at 10110. 10110 is a seed stage fund here in LA. All opinions expressed on this show by me and my guests are solely our own. If you are interested in LA Venture, go to 10110.net/podcast, where I've made a sortable list of all of the great LA VCs who've been on this show.
Spencer Rascoff, founder of Zillow, Pacaso, Hotwire, .LA, Hey Libby, and others, is back on the pod. Spencer is one of the leaders of LA Tech. He is investing and incubating out of 75 and Sunny, and I'm excited to talk to him about what he's building now and why he's doing it. Spencer, good to see you.
Hey, Minnie, thanks for having me. Excited to be here and great to see you.
We talked last a long time ago, and I know you have a lot of new projects in the works.
Yeah, lots happened since I saw you last. 75 and Sunny Ventures is my family office, and I invest in startups, usually pre-seed, seed, or Series A. We're in about 60 or 70 companies. But what I spend most of my time doing is incubating new startups. And so we've got 5 of those that I'm chair and co-founder of. 3 of those 5 are former Zillow teams, folks that I worked with in the past. And a couple, not surprisingly, are AI related. A couple are real estate related. A couple are consumer.
Yeah, I called out Hey Libby. I know there's a bunch of other ones. I'm curious what you think makes an AI company defensible, what you're excited to be investing into.
Yeah, I mean, obviously AI is all the rage, and a lot of companies are going to get funded or not get funded and be found to really just be lightweight wrappers on top of LLMs. I'm clearly trying to avoid that fate by going deep in certain verticals. And so heylibby.ai tries to solve this problem in the health and wellness space for spas and other local service providers in health and wellness, which is that they need AI sales assistants and AI receptionists. You know, these are industries where most of the people that should be, could be, would be at the front desk responding to leads on the phone or by email or text or making outbound calls, they're not at the front desk. They're cleaning they're wiping down the machines, they're restocking the towels, they are cleaning the locker rooms, et cetera. And so AI is a perfect solution in that type of category to provide basically a sales assistant, a sales receptionist, and that's what Hey Libby does. I'm also cooking up some things in the real estate space that I haven't announced yet that are kind of related in this general space of productivity and helping real estate agents achieve their full potential using AI.
Yeah, I mean, I think you said something about Hey Libby that was sort of we're all going to have an AI that represents us.
Yeah, I mean, I really believe that. I think if you think of the productivity stack that most people really in any vertical have, think about it over the last 30 or so years. Like there was a time when it was just a phone, and then it got an answering machine, and that was kind of a step change in productivity. And then they had a cell phone, and that was a step change in productivity. And then they had text messaging and email, which was another step change. And somewhere along the way, they added in most verticals a CRM so they could keep track of their conversations with clients. Well, I'm pretty confident that the next step change in productivity is going to be an AI assistant, or probably several AI assistants, depending upon different workflows and different needs. And so whether you're an accountant or a lawyer or a real estate agent or a plumber or a gym or a VC or an angel investor, you're going to have some AI incarnation of yourself that does top of funnel triage. So like I already have it on my socials from Hey Libby. So if you go to my LinkedIn or my Twitter, or my TikTok, my Instagram, et cetera, you'll see a link that says chat with me. By the way, that's where Libby comes from. It's Libby's link in bio. So the link in bio on all of my socials is my Libby. And you'll tap on it and you'll say like, hey, I want to talk to Spencer. And it'll say, great, I'm his AI assistant. Tell me about your situation. And you'll say, I'm a founder. I want to pitch him on something. It'll say, great, he does this type of investing, et cetera, et cetera. And so probably 10 or 20 times a day, my AI assistant, my Libby, speaks on my behalf and does top of funnel triage for people inbounds, people that want to chat with me about something. And then it all gets summarized for me. It connects to my CRM. I get text notification. It drafts follow-up notes. It basically does exactly what you'd imagine an AI assistant would do. So I think we're all going to have versions of that. They're just to get a little more crazy. They're going to be interacting with each other. Think, Minnie, about the prep that we did just to get ready for this podcast. You know, you sent me an email saying, here's what I was talking about. I was like, great, that sounds terrific. And we kind of went back and forth 4 or 5 times. Well, in the future, our AIs will do that for us and it'll all get summarized for us.
Totally. We're always talking about you're not marketing to people anymore. You're marketing to the AI algorithm that decides what to put in front of Spencer.
Yeah. And I mean, I think we'll have multiple. So yeah, I'll have a work persona that is my AI assistant where people want to interact with me, and that probably responds to email and text and other messages. I'll probably have an AI persona for my friends that will make plans for me with my friends, and it'll have a different energy and a different vibe, as the kids would say, because it interacts with my friend's AI.
No, I know. I keep talking to the wellness people who are going to know. Your AI is going to know, did you sleep well? Are you in a good mood? Like, is Spencer lonely today? Should we call him?
Yeah. And, COVID and quarantine and Zoom already pushed us in this direction. I mean, I don't, like, we don't have to get too philosophical here, but I don't know if that's even really you right now. I mean, I'm looking you here on a Zoom screen, and you look like Minnie. You're talking, I think, like Minnie, but I mean, it could very well be an AI-driven avatar of you. It's not even necessarily you, and there will probably be a future. The future is basically upon us, where you already can create a video AI version of yourself, and maybe someday you won't even be doing your podcast. You'll just send your AI out into the world, and it'll start interviewing people that you identify for it, and it'll record and edit your podcasts and post them, and it won't even be you anymore.
But as you know, that's not the fun of having a podcast, right?
You may choose not to pursue that future. But I mean, we're already seeing these AI generated podcasts, by the way, where, in the news space, this is happening quite a bit, where AIs are just creating and posting and publishing an AI conversation about the news of the day as a podcast, and there's not even a human behind it. So we've seen AI generated news articles for a long time, for at least a couple of years, but now it's coming with audio format and increasingly video format.
So you're incubating these AI startups. Do you have more theories around AI? And, VC Twitter's talking about how AI kills SaaS and companies will be building everything in-house. What are you seeing in the broader ecosystem?
I mean, AI and SaaS are sort of merging. Like, I don't think there'll be a difference. There already is not really much of a difference in my mind. Like, a vertical SaaS startup is going to use AI. I mean, they already are. So it's kind of all the same thing. And if you call it a small business and you call a gym owner, like, they don't care or know or understand or want to think about whether it's AI or not. They just want to know if you're solving their problems.
Mm-hmm.
So AI and SaaS are merging. AI is a technology, just like mobile is a technology, or web is, I guess, a distribution technology that helps you solve problems. So AI and SaaS are sort of one and the same, and from my perspective.
Yeah. What else with 75 and Sunny? Like, have you changed your model some? I think you do more as a studio than maybe I did.
Yeah. I mean, I have changed it a little bit. So I mentioned we're investors in 60 or 70 companies, and I've done a lot of pre-seed, seed, and Series A investing. And about a quarter of that is in prop tech. About a quarter of it is in B2B SaaS. About a quarter is kind of creator economy or Hollywood meets Silicon Valley type stuff. And a quarter is just other things I find interesting, like robotics and space, a couple other things. But I'm de-emphasizing that early stage angel investing, and I'm spending more time focusing on the incubations, partly because I find it more rewarding to work more closely with a team that I can have a greater impact with, and partly because I just end up owning more of the company. So the sort of passive 50K, 100K angel check, I still do that from time to time, but it's less interesting. And it wasn't like emotionally satisfying to have a relatively small amount of money in a startup that I wasn't really having much of an impact on. So I'm spending more time incubating and a little bit less time angel investing.
Yeah. Has your approach changed? Have you sort of thought about the studio model?
Yeah. I mean, I've thought a lot about the studio model, and I've had dozens and dozens of conversations with other studios. And I've actually convened at my house a couple of working sessions with 15 or 20 other studios to compare notes. One thing that I really enjoy about the studio model is everyone's pretty collaborative, because, I mean, VCs are pretty collaborative also, because the VC model is an assembly line from the pre-seed firms try to send deal flow to the seed firms send deal flow to the A firms. And there's some overlap, of course, but there's a lot of collaboration in the venture world. In the studio world, there's also a lot of collaboration because they're not competing. And so I've learned a lot. One of the main things that studios think about, and in some cases struggle with, is how much equity to keep at the studio level. And if you look at the last 5 or 10 years of studio models, they've significantly reduced the amount of equity that stays with the studio. It was kind of 50, 60, 70%, and now it's normalized around 10 to 20%. And it's because of your world, really. It's because the early stage venture firms have thrown up on that. And so the response to that has been for the studios to reduce their take. So it seems like they've reached sort of an equilibrium where most of them are putting in, at least my model is for us to put in between $250,000 up to $1 million and end up owning somewhere in the 10 to 20% range, usually once you're through the pre-seed. So we'll sort of put in 250 up to $1 million and help catalyze a pre-seed round around that of maybe 2 or 3 million, and then end up owning kind of 10 to 20% at that stage.
I mean, but you didn't need to convene people to know that, to figure out the cap table map. Like, what are some of the active conversations when you're convening?
Yeah. Well, one of the other big questions is my idea or your idea, right? So
Right.
like, do the studios work on their idea list, and then like when to attach the founder? So some studios take things pretty far down the line in-house. They have their own design and software engineers and PMs, and they do a lot of iterating and ideating and A/B testing. And then only once they're really ready to really create a company, do they then, or even after that, do they then attach a founder? That's not my model. My model is generally, basically people come to me, and usually it's people I've worked with in the past, and they say, I really enjoyed working with you. Let's jam on stuff. And, it was through that process that Pacaso was born. That started as a conversation between Austin Allison, who worked with me at Zillow, and he and I spent months ideating before we ended up on this luxury vacation co-ownership concept. Sometimes in the case of Tony and Anna, who are the co-founders at HeyLibby, it started off with an interest in the technology. And there we just spent months thinking about how AI was going to impact small businesses. So those have been my models. I can give you a couple more examples, but that's basically how I work, is by iterating with a co-founder or co-founding team.
And do you think it works to be passionate about so many things at once? Or what's the hardest part for you?
Yeah. The context switching can be exhausting. Absolutely. And if you looked at my phone, you'd see 8 Slacks, one for each company and one for 75 and Sunny. If you look at my email inbox, you'd see 8 email inboxes with 8 different email addresses. And that there's a cognitive tax that I pay for that context switching, where I'll be selling one candidate on company X and then immediately hang up the phone and have to be pitching the VC on company Y and then brainstorming on company Z, like all within an hour. And that is a tax that I pay. Where I draw my energy is from mentoring and coaching. So I was on the field as a founder and CEO for a long time. I was at Zillow for 15 years. I was at Hotwire for basically 5 before that. And being a full-time founder, totally obsessed and focused on one company and building company and culture for 2 companies across 20 years, I didn't want to do that anymore. What I want to do at this stage of my life is coach and teach and mentor and try to help other younger versions of me achieve their full potential, whether it's companies that I'm a small angel investor in, companies that I incubate, or students that I teach in my classes.
Do you find it's really different teaching Gen Z and sort of the kids? Like, they have a different approach to life.
For sure. I've been teaching an undergraduate entrepreneurship course at Harvard for 4 years now. And so I commute to Cambridge every week to teach this. This year I have 125 undergrads. They're incredibly passionate, very, very smart, far more qualified and accomplished than I was at their age, like by an order of magnitude. They are very, I think contrary to the stereotype, at least these kids, now these are Harvard undergrads that I'm mostly interacting with, they're super directed, like almost to a fault. And meaning that they've been on this ladder throughout high school of accomplishment, reward. And so, they just are very like reward focused. And if anything, as I say, it's like to a fault, meaning that it's hard to allow yourself to have time for creativity. With that type of a career path starting almost at birth nowadays. And so I have a lot of college students that want to start companies or are starting companies. And I know this sounds weird for somebody who teaches an undergraduate course in entrepreneurship, but to some extent I sort of discourage it. And what I mean is, the way I describe it is being a good founder is like being a musician that goes into a studio and writes an award-winning album. And there are some 16, 17, 18, 19-year-olds who can do that. But most people can't. Most people need to go out and sleep on a train and fall in love and lose a parent and travel through Europe and have all your stuff stolen and like have crazy life experiences happen to you. And then at age 20 something, 25 or something, or 30, you get in the studio and you've got your lyricist and your drummer and your producer and your co-writer. You've got your bandmates and your collaborators, and you've got your VC that you worked with at some investment bank or at your business school, or you've got your software engineer that you met at your first job in big tech. And now you've got your bandmates to try to collaborate with. But everyone's in a rush. And a lot of these students are trying to do it all right away. And it's hard to force inspiration and creativity. And so I actually encourage them to slow down and go see the world and work in big tech, work in small tech, do an internship in venture, and just sort of like let things happen to them before they need to go off and create something.
I like it. I like the musical. I say something similar. People said, how did you know how to build shifts? Like build a lot of the internal systems. And I was like, it's like saying, how do you know how to be a parent? Like one way you know how to be a parent is if you have good parents. And so I worked at Google and it had a lot of this stuff figured out. So I kind of just copied a lot of the stuff because I'd seen it working before. Anyways, similar to
Exactly right. That's
writing love
exactly
songs
right.
without having your heart broken or
Yeah.
something. Okay, so that's the teaching of the kids. So you're telling them, go get these life experiences. Do you find like what you just said about context switching all the time? I feel like that's actually the new skill. And the grown-ups are complaining that they're not focused, but the kids are great at that.
Yeah, for sure. For sure. I mean, we adults in the workplace call that context switching, but when we're talking about it with our kids, we call it ADHD. So at some point that bug becomes a feature. And, I think the question is, can you also be productive, or are you just context switching for the sake of context switching?
Totally.
It's funny. My kids' high school they did like a couple of years of study to change the schedule to increase the length of time of each class from 45 minutes to, I think, like an hour and 10 minutes. So now they only have, I think it's like 5 periods a day instead of 9. And they're doing that to reduce context switching, to get kids to focus more for longer periods of time, because there's all this research that says if you're in a class, it takes 20 or 25 minutes before you finally flip into like math mode. So we're all learning this as these smartphones and also just society moving so much faster are causing us to, to just live differently. You think about how our parents worked. It's so different.
Yeah. I'm interested in your lessons on company building and how things have changed. And maybe we can touch on Pacaso because I think it's an interesting one. I think when I talked to you last on the pod, you were building it fully remote.
Yeah. Yeah. Picasso's a couple hundred employees, fully remote. We started that way pre-COVID. And what I have found is that people and companies have really self-selected. So when I talk to, some companies like Luxury Presence that I'm an investor in, which is, I think, 300 something employees, super successful B2B SaaS company, they're entirely remote. It works great for them. They wouldn't have it any other way. But then a lot of other companies have switched back to in office. And so people are self-selecting and they're choosing the culture that's right for them. I tell my students, and I would tell any early career person listening to this, that you should seek an in-office environment or early career, that the mentorship and education and networking that you build by being in office in your early 20s is invaluable.
Do you have advice for your portfolio companies? Like I have a lot of companies that ask me, should we have maybe let our engineering be remote, but have our salespeople in-house?
Yeah, I like that model. Well,
Yeah.
I mean, I think it's very founder specific. And usually my advice is like, it's up to you. All I can tell you is across data points of 70 or so companies, this is what I've seen. And I would summarize it as it is harder to have intentionality about culture if you're remote. It takes more work and effort. It is harder to be creative and to move fast, but it's easier to recruit and retain remotely. So those are the trade-offs. Now that you have it, you can decide what's right for you. If I were starting a company today and it were completely up to me, I would probably have executives, sales and marketing, and probably product central and engineering remote, and do like frequent office visits for engineering.
Any other just ways you've seen company building change?
Well, I mean, everyone is doing so much more with less. I'll give you a couple of data points. One company that I have, which has about 70 million of ARR, they have 350 employees. And I asked that founder, I said, if you were starting today and you were baking AI into everything about your company, how many employees would you have? And he said 75. So, and I said, well, why don't you just downsize to 75? And he said, well, really my plan is to grow revenue by 3x from here and keep headcount flat.
And is that like internal productivity, like the coding and the customer service?
Yeah, exactly. I mean, he walked me through every functional area. He's like, we used to do content marketing and write blog posts. Now AI is doing that. We used to write press releases. Now AI is doing it. We used to have customer support. AI is doing it. Software engineers are twice as productive. All of our testing is through AI. Like he just went through every single part of the organization. So, I mean, it's great. You're going to continue to see sub 10 employee companies. I mean, I had one today that pitched me, I think they have 4 million of ARR on 12 employees. And I was like, that's awesome. That's amazing. That would not have been possible 2 years ago. So that's the future.
And where does that lead? And sort of square that with what we're seeing with exits and later stage companies and multiples and the lack of exits.
Yeah, I describe the venture ecosystem as pretty broken right now. It's an assembly line. You've got startup ideas. They raise pre-seed, then seed, then series A, B, C, D, et cetera. And I think it's 35,000 late stage private companies now. And that's a record high. Like the end of that assembly line is sort of broken because there aren't enough IPOs. There aren't enough M&A exits, partly for regulatory reasons, but partly because of price expectations just haven't adjusted from the big rounds of a couple years ago. And those companies aren't dying because they raised those big rounds during the zero interest rate era. So those are the three types of exits: M&A, IPO, and death. And none of those three things are really happening.
So I remember you were working with companies and some of it was like helping them look like a public company, helping them get ready for that. Are you doing something where you're helping them get ready for a PE exit or something?
Well, so, Pacaso is doing something quite interesting and trailblazing right now. Pacaso is doing a Reg A offering. And because the late stage venture market is so broken, as we described, and because it's consistent with Pacaso's mission, we've basically done a quasi IPO. And Reg A is a law that came out through the Jobs Act, which is to encourage more startups and innovative companies to raise money from individual investors. So Pacaso now files audited public financials every 6 months. So rather than every quarter, every 6 months. And we're selling shares to the public right now at about a $750 million valuation. And retail investors, individual people can buy shares. The shares don't trade. So there's not like a daily stock price, but dozens of companies have raised tens of billions of dollars through this Reg A concept. It's sort of a bit of a bridge between like late stage private and IPO. And it's super consistent with the company's mission of trying to democratize access to an asset class. And so that's why we were attracted to it. But I think you're going to see more and more creative solutions to this problem. That's Reg A, fundraising under Reg A is an obvious creative solution. Other forms of crowdfunding, you saw the SPAC phenomenon be a reaction to this as well, but that didn't end so well because the government basically changed the rules of the game in the midst of the SPAC boom. Private equity is stepping in a little bit, Minnie. Like you're seeing a lot more private equity M&A in the software space, but those, they need companies at scale. The sweet spot for private equity is like $500 million to $3 billion enterprise value deals. And so those are companies that are at a pretty significant scale. And so for most tech companies, you're not at that scale. They're still in the earlier stages.
So tell me on the sort of the pros and cons of the Reg A. Like, should more companies be doing this?
I think so. And I think Pacaso, will be looked back as a trailblazer. And ever since we announced it just a couple of weeks ago, I've had dozens of VCs and dozens of companies reach out saying like, tell me more about this. I didn't know this was a thing. Like, how does it work? And as I say, we didn't create this. There have been dozens of other companies before that have raised tens of billions of dollars through this method. I wish in retrospect that Zillow had done a Reg A offering. It didn't actually exist back then, but had it existed, we would have done this, in the step after our last venture round, but before the IPO, as a way to build a bigger retail investor base, get more people rooting for the company. In the case of Pacaso, we have the added benefit where we're raising awareness of people to invest in the company through Reg A, and some of them are also interested in buying Pacaso's shares in these units in these homes. And I think that's another added benefit for consumer companies doing Reg A offerings.
What's the downside?
The downside is there's transparency on your business results. So, we basically file the equivalent of an S1. They call it, I think, a Reg 1. And S1 is the IPO prospectus. It's a couple 100-page legal document. So firstly, it takes a long time to create that. You need audited financials. You need a public company ready company. And so that's not cheap and it's certainly not easy. And then everybody gets transparency into your business, competitors, the media, other startups that might choose to compete with you in the future. And that can be uncomfortable. From my perspective, that all makes us a better company. Just like when Zillow went public, it made us a better company. I think the scrutiny and the bright lights that being public, or in the case of Reg A being quasi-public, make the company just better run. Like it causes everyone to stand up a little straighter, to operate at a slightly higher degree of scrutiny because we are under that. And that brings out the best in people. In a sports metaphor, I'd say it's the equivalent of playing football on Sunday rather than playing football on Saturday. It's like you're in the pros now. You're not in college anymore. And that's what being public or quasi-public through a Reg A affords you.
I totally appreciate that. But let's shift gears, talk about you. You're passionate about LA tech. What do you think makes an ecosystem inflect? And is it just about having huge, successful companies like a Microsoft in Seattle?
Yeah, I mean, Microsoft, Amazon, and then to a much lesser extent, Expedia and Zillow
Yes.
really help make Seattle Seattle. LA has all the right ingredients. I mean, we've got tons of venture capital, early stage, mid stage, late stage, angel investors. Frankly, we probably have too much venture capital. We're probably overfunded in LA, relative to the number of deals that are here. So we've got the funding thing figured out, and it was not that way 5 years ago. Certainly not that way 10 years ago. So VC, check. Other ecosystem participants like the lawyers, the consultants, the investment bankers, kind of the advisors, the startup coaches, the mentors, like the universities. So that support ecosystem, check. We have all that. Big companies, we sort of have that. We certainly have that in certain categories like space. We have it with Snap and then with Netflix and Hulu and Disney and some in certain categories like streaming and diversified media. What we don't have yet is enough exits in some of the other categories. So we're weaker on cloud, we're weaker on AI, and we're weaker on B2B SaaS. And that's where a lot of the value has been created. And we're stronger on creator economy, which has been a terrible category over the last couple of years. So I think that's the challenge for LA. And what we also have, I guess, which is important to a community is the level of collaboration and excitement and energy and community building. And that we have in spades. Like that, I feel stronger than ever. And that is a good leading indicator to success for the community.
I think it's a huge deal. I think it's like building culture in your company.
Mhm.
Like the community has a different culture and it's great.
Yes, totally
Um,
agree. Totally agree.
I asked my partners, we had our partner meeting right before this podcast. I said, what should I ask Spencer? And he said, why is he so sunny? That was the question.
Well, it is the name of my firm. So, I mean, I spent almost 20 years in Seattle running Zillow, and I had a folder on my desktop and in my email that I don't know why, but one day I just called it 75 and Sunny, which was everything that was like my next chapter. So houses that I saw in Southern California that I was interested in, or business ideas, or like just anything that was next. And so for me, that always meant next. And I mean, being a founder is all about being optimistic, and being an investor is all about being optimistic. So that's the way I go through life. And I named my firm that because, of course, it's a nod to the Southern California weather, but it also reflects I was born in 1975 and I am sunny. So 75 and Sunny Ventures is the name of what I do. And it reflects my attitude and personality as well.
It does. It really does. It's lovely.
Before I let you go, I have to ask about Office Hours, your podcast. You've had amazing guests on the show. What are some of the lessons that stand out?
Yeah, I mean, I did Office Hours for many, many years. I think probably 100 episodes or so. I haven't done a season in probably 2 or 3 years, and I'm going to restart it probably in 2025. I had a number of military leaders on Office Hours, and I've never been in the military. Far from it. I wouldn't last very long, I don't think. But I always love interviewing military folks. And the similarities between being a tech founder and being in the military are pretty significant. It's all about mission orientation, communicating a vision and strategy, actually decentralizing decision-making more than I expected. You would imagine that the military has a very tight command and control. It actually doesn't. They try to push decision-making out to the nodes as much as possible because that's where the information resides. It's in the foxhole. It's, with the unit level, just like it is in startups, because that's where the information is. And so ideally you want that to be the unit of decision-making in most cases. So I love interviewing military folks, and I've had probably half dozen on Office Hours, and I'm fascinated by that. Sheryl Sandberg talked a lot about the career jungle gym, which is something I talk a lot about in my course, in my college class, because a lot of my college students, they say, hey, I want to be like Minnie someday. I want to be a founder turned VC. Like that's the gold standard that most of my students want. And they say, how do I do that? And the answer is there is no single way. There are an infinite number of paths. And this is what Sheryl talks about in her book and in her social media is this, there's not a career ladder. There's a career jungle gym. In a jungle gym, you go up, you go over, you go down, you go up, you go around, and like you kind of make your way through a jungle gym. It is not like a career ladder straight up. And it can be very disconcerting to a college kid, especially a high performing college kid who's used to like, okay, if I do well on the PSAT, then if I do well on the SAT, then if I get into this college, then like there is no if then in the career path that you've chosen or I have. So you have to kind of roll with it, which can be a little bit uncomfortable.
No, I liked what you said at the beginning about sort of the space for creativity. Like you can't think what gets me to the series B. Like you have to think for yourself about why you're building and what you're building and how it's going to resonate for customers, all that. Like you can't,
Totally.
there isn't the next ladder to look at.
That's right. That's right. And that's awkward. And that's one thing I will say about the other career path that many of these kids take is investment banking. And one of the attractive aspects of investment banking is the career path is clearly understood. You get a summer internship, then you get the full-time job as an entry-level analyst. And if you just stay there and keep your head down and do a decent job, like, you'll become an associate and then a VP and then an MD and then an SMD and you're kind of on your way. And that can be very comforting if that's your jam.
Yeah. Well, congratulations on where you are now. It sounds like, to me, like a dream job. Like I kind of always want to be building like 5 things at once.
It's fun. I'm enjoying it.
And thanks for coming on the pod.
Thanks, Minnie. Thanks for having me.